2021 has been a good year for the price of oil. We came into this year having finished off last year about $48 a barrel. The price has been as high as almost 68. We're a couple of dollars off that at the moment. It has been somewhat sideways over the last couple of months. But is this about to change? Are we finally going to see oil break through $70 a barrel? Or actually, is the best behind it and now's the time to go short? I think it's always interesting to have a look at oil, because it is a barometer for expectations for the world economy. Of course, a year ago, it was a different story. Back in April, the cash price traded down to almost $10 a barrel. But since then, we've seen this recovery. This recovery has continued. We've got this trend that's been going on now. We haven't seen a fresh high in this recovery for more than 2 months. We've got to go back to early March, the last time we saw a fresh high. So I thought, well, let's take a look at it in a bit more detail and see if there's a trade to do here. We've got the usual mix of trades in the account, but we don't have anything in oil. We've closed out some positions in oil. So back on the 7th of May, we closed a few for a decent profit back then, but it's left us with no position. So as usual in this video, I'll talk about what's been going on with it lately, then we'll come back onto the platform and we'll see if we can set up another trade to try and profit in the weeks ahead. Hello, I'm David Jones from Capital.com, and I thought we'd do an update for crude oil, what we can expect for the oil price over the weeks ahead. So as usual in this video, I'll spend a bit of time talking about what's been going on with crude in recent weeks, the news, the big levels to watch. Then we'll jump back onto the platform and see if we can set a trade up. As usual, if you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel. And of course, every Friday now at 2:30 UK time, we do these live streams. If you're subscribed and you've got the alarm bell notification pushed, you get a notification off YouTube just as we're about to go live and look at a whole host of different markets. Right, let's get into it and take a look at crude oil in a bit more detail. Although it's fair to say the last few months have been somewhat sideways for the price of crude oil, it's still put in a good performance for 2021. For the year to date, from where it ended last year, the price of crude is up about 35%. I think easing of restrictions as we head towards the summer, in the likes of Europe and the US and other countries and areas around the world have clearly built on the expectations that demand is going to increase as we see economies get somewhat back to normal. And I think that's something that has helped the price of crude oil. As an example, last Sunday, US airports saw passengers at their highest levels since March 2020. Again, not really a surprise, but it does show, I think, that as these lockdown restrictions are easing, we're seeing, for example, more travel, and that's, of course, going to impact on demand for oil. But something that's worried markets in recent weeks, the last few months, has been the spectre of inflation increasing as the year goes on. And the oil market is not immune from this. And that some analysts are worried that if we do see inflation creep up, the cost of living gets more expensive, it's going to hit consumers and they're going to stop spending so much. So that is something towards the back end of the year that some people think may affect demand for the price of oil. The investment bank Goldman Sachs still very bullish. In recent days, they've put out their year-end target for West Texas crude. They're forecasting $80 a barrel. So what's that? Another 20% or so from where we're trading now. And they're saying the reason behind this is the mass vaccination programs we're seeing around the world helping economies get back to normal. Of course, the big risk here, as it has been all year for oil, is that markets are overestimating the economic recovery. So far, those concerns don't seem to be founded, but maybe that will change as the year goes on. Either way, I still think there are opportunities in oil. Let's talk about the levels to watch, then we'll jump back on the platform. So we got some obvious hurdles on the upside, $67, $67.80. We've seen it fail a couple of times up at these levels. Doesn't really have the momentum at the moment to have a look at the $70 a barrel psychological mark. On the downside, good support, fairly sharp support, turned around quite quickly from $61.50 a barrel. As usual, to put some color on these numbers, let's take a look on the platform and see if there's a trade to do. So let's start things off with the bigger picture view for oil. We do have this trend now going back to April of last year. But what I probably want to focus on, what's more relevant, is what's been going on over the last few months. So there's the move to the highest we've seen it in this trend, up at $67.80 a barrel. And we had this period from March through to mid-April where it really went sideways. Then it started moving again. I've got this 20-day moving average on here, and it does an okay job when it's sort of trending as sort of like a floating support. Dipped below it May the 19th, sold off, and we've climbed our way back above it recently. But it is perhaps a bit choppy at the moment, the trade in oil, compared to the trends we were having from April onwards from last year. If we take a look at the RSI down here, 10-day RSI on this daily chart, not too much going on at the moment. The last signal we had very briefly overbought on the RSI on the 4th of May. We did see the price sort of roll over gradually from there. But at the moment, with the RSI around 60%, we're not getting too much off that. So what I want to do is probably have a look at the shorter term chart to try and get an idea of a trade here. It's all a bit choppy and sideways over the last few months. So let's take a look at the shorter term chart in a second and see if we can set a trade up. From a big picture point of view, that trend is still up, so looking at the daily chart, for me, it's only if it's slipped back below these March lows, coming in around $57 a barrel, do we have to worry that actually the trend on oil is potentially reversing. So for now, I think I'd still be inclined to be a buyer of dips on oil. The first target is a run back to the March highs, just ahead of $68. If we break that, then I think we can start looking at $70 as the next objective. But let's take a look at the intraday chart, see if we can set up a trade here with a bit of try and refine the entry point. So here's that period from mid-March through to mid-April where it went nowhere. And then we did sort of start building a trend, but it's got a bit knocked back over the last couple of weeks or so, but we're back up towards the highs. So I do worry, are we going to go into a bit more of a sideways trading period for oil? So the trade I'm going to do, I still want to be a buyer on dips. I mean, clearly that would have been a great place to get in a few days ago at $62 a barrel. We're not there now. What I'm going to do is leave an order to buy because we have this volatility on oil. So the trade I'm going to do, I suppose if you were watching this in the short term, one option at the moment would be to be a short seller. We've got these old highs from March ahead of 68. We've got the recent highs up at 67. With the price trading at 66.30 at the moment, if you really wanted to go short, you've got some obvious levels for stops. But for me, because the bigger trend is still up for oil, I want to be a buyer, but I don't want to buy it here. I want to try and buy a bit of weakness. So what I'm going to do, I'm going to put an order in to buy if it gets knocked back to $63.50. That's only where it was a few days ago, but that's when my buy order is going to come in. When it comes to setting a stop loss, I could set it under that most recent low, $61.50. I'll go a bit further out and put it down at $60. So I'm a buyer at $63.50 with a stop at $60 and seeing if I can get on board for a swing up to perhaps the highs for the year so far and maybe onto 70. Let's see how it works out. Let's place the trade. So I'm ready to go. The price at the moment is $66.30. I'm going to buy 101 barrels. If the price falls back to $63.50, so just where it was a few days ago, if that order gets filled, put a stop at 60. And like I say, you could have a tighter stop on the trade, but as we don't look at oil every day, I like to give these trades a bit of wiggle room. Let's place the limit order. Okay, the order's in, so we're buying 101 barrels if it gets back to $63.50. I think a bit of patience might be required on this trade. Clearly, it's strong at the moment, but I think it's going to be an interesting market to watch over the next few days if it does start to roll over again up here. The pattern for the last, couple of months or so, whenever we start trading up near these levels, the sellers do come out. So maybe that ends up being an opportunity for me to get filled in this order that you can see on the chart there, just from a few days ago where it was trading. We'll see how it works out, but the trend is still up. It's been a little bit boring over the last few months. So I think we really need to break $68 a barrel, and then perhaps we're seeing the next leg higher starting. We'll come back to it and see how it works out. That's it for the update in oil. We will see how the next few weeks pan out. We cover it in the live streams and we'll come back to it again in the next few weeks and see if it's finally managed to have a move up towards $70 a barrel. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your trading. For more trading videos just like this, please subscribe to our channel.